Stock market for beginners. Last week I talked about American Express. I sold the stocks. I took profits for 2000. Today I'm going to talk about the stock that I'm buying in January 2024. That's a super stock. It's one of my favorite stocks. I'm going to tell you that stock at the end of the video. And even if you don't have so much of money, you can still use call option to get exposure to the stock. And today I'm going to talk about 5 bank stocks that are reporting earnings next week, and also the bank stock were dropping last Friday and last week after the earnings. I'm going to tell you why. Also, the bank stock were dropping. And after American Express, after I sold American Express, then the stock dropped the last 5 days. The last 5 days. Why? American Express, then the stock dropped. Okay, can you hear me? If you can hear me, comment down below. American Express dropped 3.28% after reported earnings. A lot of channels, CNBC, lots of experts, they talk about bank stocks are poised to outperform in 2024. Do not listen to all these videos. I do not. These are just for entertainment only. If I had listened to them and I did not sell American Express, it would have dropped, and I would have missed out on one super stock that I bought using the proceeds from the sale from American Express. So what I do is the opposite of what the experts are saying. And I'm going to tell you why I do not like bank stocks. And there are a few reasons why I do not like bank stocks. S&P 500, it was only up 0.08% on Friday, January 12th. It was up in the morning, then it dropped, then it recovered. And it's very, very normal. The last 5 days, it was up. But if you look at year to date, at the beginning of the year, the first week, it was dropping. Then drop, up, come down, up, down, and it's very, very difficult to trade. And Nasdaq, on Friday, it did not move much. The last 5 days, it was up 2.8%. Year to date, at the beginning of the year, it was dropping. A lot of people were saying, if the stock markets were dropping at the beginning of the year, it would not be a good year for 2024, and it could even be a bear market. And do not listen to them, because yes, it's better if the stock market were up at the beginning of the year, but this is the second year of the bull market, so it's very, very hard for us to have another bear market. And like I said before, there were a lot of investors who did not listen to my channel, so they did not buy stocks last year or even the year before, 2022. So if you listen to my channel and bought stock in 2022, congratulations. If you bought stock last year, congratulations too. But this year is not bad. You can stay invest, because there are lots of investors who don't understand stock markets. They are stay on the sideline, lots of cash on the sideline. So they're gonna have FOMO this year, and they're gonna invest a lot. And Dow Jones, it was down. The last 5 days it was up. Year to date, up and down, up and down, up and down. So it's very, very difficult for traders. That's what you may think. Let's look at the profit. I made January 8th to January 12th. I made over 2,700. And from January 2nd, January 1st was the holidays. And January 2nd to January 5th, I made over 4,700. So in 9 days, over the past 9 days, I made over 8,400. So just trading stock option for 2 to 3 hours a day. I've been traveling around the world for the past few years. That's really great profits. Does it look like a market where it's so difficult to trade? Not at all. It looks like it's so easy to profit, right? Yes, because I use call option, put options, and advanced options, and I invest in stock as also. I'm going to tell you what stock I invested in at the end of the video. And let's look at last year. Last week, Delta Airlines reported earnings 8.97%. Like I said before, I do not like airlines. If you look at the past 5 years, it was down. So if you look at a stock this way, it's very, very hard for me to lose money. Of course, most people lose money because they don't even look at stocks like this before investing in the stock. Always look at the past 5 years trend. Has it been going up? If it is, then we're going to look at the other 4 criteria that I have. So Delta Airlines is out. I'm not going to invest in Delta Airlines. Why did it drop? Because Delta Twins profit forecast for 2024. So you see, airlines, their profits is always fluctuating. 1 year it could be really, really good. The next year it could be bad. So if you look at maximum, see, airlines, the profits are not consistent. Especially for the past 5 years, they were not consistent. Even before that, they were not consistent. Yes, 2012 it went up because of the cheap money, low interest rate. It went up, but they do not perform very well over the long run. So that's why I do not like airlines. And the next stock is Bank of America. Like I said before, I sold Bank of America a long time ago. And I do not like Bank of America. If you look at the past 5 years, it's only up 11.95%, less than S&P 500. So that's why I do not invest in Bank of America. 5 days it's down. Why did it down? Because the lower 4th quarter profit hit by regulatory charge. So if you look at the bank, if Federal Reserve increase the interest rate, they make more money, yes, because they can charge higher interest rate to the customer. But if economies collapse because of high interest rate, lots of businesses gonna lose, and they're not gonna pay back them loans, and they're not gonna borrow money. In that situation, the bank's gonna lose. So high interest rate, the bank can lose. And if the Fed decreases the interest rate, then their profits could go down because lower interest margins means lower interest income. And plus, the decrease in the interest rate may be a sign of weak economy. So if it's weak economy, not a lot of business gonna borrow money. You see, either the interest rate are up or low, it doesn't matter. The banks still gonna lose. And plus, let's say if they make lots of money and the Federal Reserve or the government wants to charge more fees to the bank, they're gonna impose more laws, more regulations, they still gonna lose. Their profits gonna go down. So that's why I do not invest in the banks. And if you look at JP Morgan, JP Morgan was down, but the past 5 years, it is up 61.63%. So it's better than Bank of America. JP Morgan may be one of the few banks at the top, and that I might be putting in a watch list. And first criteria, look at the past 5 years. Has it been going up? Yes. Has it been more than S&P 500? If it's more than S&P 500, good. If it's not a big deal. I prefer to invest in stocks that are higher than S&P 500. So look at this JP Morgan. The past 5 years, is it more than S&P 500? Let's look at S&P 500. S&P 500 chart. Or we can look at VO. So the past 5 years, S&P 500 is up 79.12%. So JP Morgan is only up 61.63. So you know what? It's all my criteria. So let's say it's okay for you to invest in JP Morgan. What's the second criteria? And second criteria is, has it been in business for more than 10 years? Yes, since 2000. So how about Maximus? Has it been a public company for at least 5 years? Yes, it has been a public company for at least 5 years. The fourth, do I like this business? I don't like bank business, so I'm not gonna invest in the bank. But if you, let's say if you like banking business, then you're gonna look at financial statements. If it passes all the good criteria for the financial statements, then yes, you can invest in the banks. So that's my opinion, professional opinions. I'm not telling you to invest in these stocks. This is not a financial advice to invest or trade any of the stocks that I mentioned in this video or any of my videos. P/E ratio, I don't really care. It doesn't give any meaning. Sometimes P/E ratio can be high, low. There's no meaning. Dividend yield 2.40%. I don't really care about dividend yields because I can make much more profits from trading advanced option. Let's look at stock number 2, Wells Fargo. That we talked about it last week. 5 years is down, so I'm not gonna even look at that. No, not interested. How about Citigroup? The past 5 years, it's down. If you just invested your money would have become less, 16.63%. So yeah, dividend yield is up because the stock price went down. Dividend that you will see divided by stock price. Of course, if the stock price goes down, your dividend yield is gonna go up. So it's natural. It's not a good company. So I don't care about dividend. And why did it go down? Citigroup plans 20,000 job cuts as its reports worst quarter in 14 years. Can you believe that? 14 years. So it's not a good time. It's not good to be a Citigroup investor. So that's why stock price went down. So I'm going to talk about 5 stocks that's going to report earnings next week before I talk about one super stock that I invested in January 2024. That is Goldman Sachs reported on January 16, Tuesday. Goldman Sachs is one of the top investment banks in the world. So I graduated with economics and finance, so lots of my friends, they wanted to work at the Goldman Sachs. They want to apply, and you can make lots of money if you get a job as an investment banker in Goldman Sachs. The first year it can be 150,000. On second year, third year, your pay increases. It can be 300,000, 400,000. But you are working from morning 7, 8 a.m. until 6, 7, 8 p.m. 12 hours a day, maybe 6 days a week. So after 2 or 3 years, then you just want to give up. There's no life at all. So for me, I don't have to go to the bank at all. And plus, if economy is performing really bad, they can catch you anytime. You can lose your job anytime. For me, I trade stock options, advanced option. I invest in stocks, so only 2 to 3 hours a day. I don't have to worry about losing my jobs or time deadlines. There's no deadlines. I can do anything I want. I've been traveling around the world for the past 2 years. Yeah, let's look at JP Morgan. Yes, it performed better than S&P 500. Yes, it passed my first criteria. And how about second criteria? Has it been in the business for more than 10 years? Look at that. Founded in 1869. Yes, it passed my second criteria. The third criteria, has it been a public company for at least 5 years? Yes, it has been a public company for at least 5 years. Fourth criteria, do I like this business? No, I don't like this business. It's out. It's out. And let's look at stock number 4, PNC. Has it been outperforming S&P 500 the last 5 years? No. So that I'm not even gonna look at that. Of course, the reporting, the next week coming, some of the banks may go up after the reporting their earnings, and some of the may go down. It's very normal. But I'm not interested in PNC. Let's look at Morgan Stanley. The past 5 years, it outperformed S&P 500. Yes, it passed my first criteria. And second criteria, has it been in the business for more than 10 years? Yes, since 1935. How about the third criteria? Has it been a public company for at least 5 years? Yes, it has been a public company for at least 5 years. And do I like this business? It's in banking. I don't like that business, so it's out. If you like that, Morgan Stanley and Goldman Sachs probably maybe a choice for you. You can choose between those two after looking at financial statements. Let's look at stock number 2. The past 5 years is down. I don't even have to bother looking at it. They're going to report earnings on Tuesday, January 17. And yeah, Morgan Stanley looks like one of the best stock that we can talk about today. And number 1 stock that I'm going to talk about is Jim Cramer, favorite stock. He said it's a very, very good stock. That's what he said, Jim Cramer. FRC, First Republic Bank. He said about it, it's not coming up, so let's just look at FRC. He talked about it on March. He talked about it on March 10, 2023. It's a very, very good stock. That's what he said. March 10, 2023. March 10, 2023. It's a very good stock. If you have bought the stock after listening to him, you will have paid $81.76. Then after that, now it's become 10 cents. It's not a Chinese company, 10 cents, but its share price, stock price is 10 cents right now. Look at that. March 10, 2023, 2.8 million views. FRC is new focus. Very, very good bank. Look at that. Of course, it's very difficult to pay stock, so I'm not blaming Jim Cramer. What I'm trying to say is you have to do your own due diligence and invest. Like me, everybody is talking about banks. They are bullish on banks for 2024. I sold American Express. Then I made money. I put money in one super stock that I'm going to talk about it very, very soon. And last week, the economy news called CPI came out higher than expected, so that's why the stock price went down a little bit. If you look at S&P 500, 5 days, Thursday, cost CPI data came out higher than expected. The stock sold off, but lots of people were on the sideline. They were waiting for this opportunity to dip buy. Because they did not watch my channel last year, they missed out. So now they are thinking, what Master Rich said it was right. So I'm not gonna miss out the opportunity. He told us to dip buy every time we got a chance in December, January. Yeah, I'm gonna buy. So that's why a lot of people started buying. So the stock market recovered and closed almost unchanged. And the same way with the other stock, Nasdaq. If you look at that, it dropped a little bit, but it recovered when the market closed on Thursday. Dow Jones, the same way, it dropped after CPI data came out. Everybody saw that it recovered, dip buy. FOMO. It's a bull market, so I'm gonna repeat it. Anytime there's a dip buy opportunities, I'm gonna make use of it. That's what I said. That's what I'm thinking. I also make use of dip buy opportunity as well. So next week, what we're gonna see is that we're gonna have some data. On Monday, Tuesday, there's no data. PMI data is gonna come out on Wednesday. Then initial jobless claims gonna come out on Thursday. Q4 GDP prelim is gonna come out on Thursday and Friday. Personal income, PC index, core PC index. So I don't think they're gonna change the market so much. Except if Federal Reserve Chairman or President gonna talk about something, that could impact the stock market a little bit. Other than that, I think it's gonna be a volatile market. Lots of earnings gonna report, so it can be go up or go down depending on the earnings report. So I bought Nvidia. I bought on December 21st. Then I bought 50 of Nvidia on January 5th. So after I bought it, what happened? The stock price went up like crazy year to date. And then why 0.8%? Lots of people will say Nvidia was up 300%, 200% last year. So it's not gonna perform really well at all. You know what? I bought it. That was the first stock that I bought for the new year, January 2nd, January 3rd, January 5th, I bought it. So then now see, my profits were up from 6,000 within 6 or 7 days. 6,000, look at that. 48,000, then it became 55,000. Good profits. So how can you profit from this stock? If you don't have so much money, you can profit from using call option. So usually, personally, I probably use April 19. That's my personal choice. You can choose any date as long as it's not too close. If it's too close, your option is gonna expire so fast. So do not choose option less than 30 days or 2 weeks. So I usually like to choose option a little bit far out to give time for them to appreciate. So if you believe that the stock could be up 495 up, you can choose 495. If you believe the stock price could be more than 550, you can choose 550 strike price. Then click on it, 550. Then you just need to pay 46.30 multiply 100, 4,630. You will get similar exposure as if you already owned 1,100 shares. One call option represents 100 shares. That's it. So this is an example. This is not financial advice. I'm just showing you how I would do if I don't have money. And if you want to learn more about stocks, options,